Welcome to another series of accounting videos. In this series, we're going to be looking at property, plant, and equipment, the acquisition, the use, and disposal of these assets. In this exercise, we're going to be looking at land improvements and buildings, the costs associated with each of these, and how we would allocate it to each of these individual assets. It's really important that we allocate the cost appropriately because land, as we know, is the only asset that is not depreciated while we have it. Only when you sell it, you recognize gains or losses. Buildings and land improvement, on the other hand, are going to be depreciated over their estimated useful life. So let's take a look at an exercise and see how we can better understand the concept of valuation of land improvements in buildings. So in this quick example, we have a company that has incurred a series of costs. All of this relates to land that has been acquired that is going to be used to construct a building. So we have 4 account names that we are given, and we are told that we are asked to identify whether each of these costs belong to these individual accounts. So let's start out with identifying what those accounts are. We have land improvements, building, and if it doesn't fit into one of these 3, we're going to call it other accounts, and I will tell you which one it is. So land, as we know, is a natural resource that does not get consumed as we use land, unlike other natural resources. Land improvements are things that are done to enhance the land, the usability of land. Some of it could be aesthetic, it could be landscaping, etc. But all of these are going to have a limited life, unlike land, which has an indefinite life. Building, as we know, is a structure that is going to be used by us, that's the humans, in order to conduct our business. It could be an office building, a factory building, or something else. So let's start out with each of these. The first one is they've told us you borrowed money to pay the building contractor. That is, we've signed a notes payable with the bank and we borrowed money. So this amount, 275, the money that we have borrowed is shown in parentheses. That's the receipts, cash receipts. This one obviously is not land improvement or building. It's a notes payable. So right now we're going to call it other. The next is I paid for construction from notes proceeds. So this 275 has been used to pay. What have I paid for this? I have paid for the building. To start the construction on the building, I have paid for it. So it's going to go into the account building. Then I have the cost of landfill and clearing. Okay, so I have incurred a cost of $8,000. So now here's how we distinguish between what we spend on building and what we spend on land. All expenses incurred relating to the purchase and getting the land ready for its intended use is added to the cost of land, not building. So the $8,000 that I spent to make the land usable, to clear it, to do the filling, etc., all of that is going to be charged to land, not the building. There's delinquent real estate taxes on the property assumed by the purchaser. So I have bought the land. There was taxes that was owed by the previous owner. In order to get clear title, I had to pay that $7,000. That $7,000 is going to be added to the cost of land. Then I paid a premium on 6-month insurance policy during construction. Now, during construction, it means the work has started on the building. Any cost incurred towards construction, getting that land, getting the building ready, is going to be a building cost. It's going to get added to the cost of building. Now, I finished the project 1 month ahead of time. Therefore, I got 1 month of that insurance premium was given back to me. It was refunded, $1,000. That $1,000 is going to get subtracted from building. As in the cost of the building went down by $1,000 because I effectively spent only $5,000 on insurance during construction. Architect fees on building, that's pretty obvious. That's going to go to building, has nothing to do with land. Cost of real estate purchased as a plant site, land is $200,000 and building is $50,000. I purchased this as a planned site, which means this entire $250,000 I've spent on land because I don't want that building. I'm going to get rid of that building, and I'm going to build my plant. My plant site basically means I'm going to have a factory building constructed over here. So all of it goes towards the cost of land. Commission fees paid to real estate agency. This is for the purchase of the land. So it's going to get added to the cost of land. Installation of fences around property. Well, this is not land, neither is it building. This is going to be a land improvement. I did something to enhance the value of the land by building a fence around it. Land improvements such as fences have limited life. They're not going to stay there forever like land. They may not have the same life as a building, so we keep it in a separate account and we call it land improvement. Cost of raising and removing building. We bought the plant site that had a building on it. That entire 250 we put towards a building. This 11,000, sorry, the 250 was put towards land. The 11,000 is also going to go to land because I'm getting it ready for its intended use. I'm getting rid of the old building. Proceeds from salvage of demolishing the building. I demolished the building and I received $5,000. I was able to sell something as scrap and I got $5,000. That is also going to go towards land, as in the land is that much less expensive. I'm netting the cost of land and saying it's that much less expensive. Interest paid during construction on money borrowed for construction. So this $13,000 interest expense gets capitalized and added to the land and added to the cost of building, not land, because the construction has started. Okay. Cost of parking lots and driveways. I built this on the land, but this is not building. So this is going to be another example of your land improvements. Land improvements is $19,000. Cost of trees and shrubberies planted. This is a land improvement. However, now I'm told it's permanent in nature. So what would I do with this? $14,000 that I spent. I put that towards land, not land improvement, because it's permanent in nature. Unless it said permanent in nature, I would have added it to land improvement. And the last is excavation cost for new building. Okay, so this $3,000 cost, should it go towards land or building? Everything getting it ready for its intended use, that is to start the construction of the building, was going to land. So this one will go to building because I've started the excavation for the new building. Now this is a building cost, not a land cost. Now, assuming all of these were the accounts, the expenses, the cash receipts and cash inflows and outflows relating to the acquisition of land and building, we now have our accounts all set up over here. I need to find out what the total amounts are. As I'm using Excel, I will do a quick sort and I will sort it by column D. And now I have all the information I need over here. So for building, the net amount is $318,000. So for building, I will write $318,000. For land, when I add up all of this, it comes to $294,000. And that's going to be land. Land improvements, there are only two, and that adds up to $23,000. That's $23,000. And the other account that's notes payable is $275,000. Okay, so I'll leave it at this for now. We know where the numbers came from for each of these. Okay, so once again, each of these costs as they were incurred, you'll be doing your journal entry, and we have identified which account we are going to debit or credit. So if these numbers, the numbers that are in parentheses, that means cash is debit and this account is credit, building account is credit. Otherwise, cash is credit and building is going to be debited. We are capitalizing those costs. So once again, in this exercise, we've looked at an acquisition of property, plant, and equipment, and we've had to identify whether we would capitalize it to land improvements, or buildings. The difference is, If it is land, it's not going to get depreciated. It stays in your balance sheet at whatever the historical cost is. Land improvement and buildings are going to be depreciated over their estimated useful life. And those need not be the same, land and land improvement. Although I built them, I did the work at the exact same time, the life could be very different for the land improvements and buildings. So this is one quick example of acquisition of property, plant, and equipment. The next exercise we're going to look at some more examples of various types of assets that we purchase, different types of situations where it's not a cash transaction, and we'll see how in each of these cases, the capitalization of the costs that are incurred at this time are very important. So with that, we conclude this particular video.